All right. Once again, our topic for tonight is understanding market structure. You and I will be analyzing the market. It's going to be you telling me, can't hear you, sir? Why like that? Comma, Precious, comma, you should be hearing me now, Precious. If Precious can't hear me, but can every other person? Yes, it's very clear, but the network is logging me out of the page. Okay, it could be your network then, Priboy. All right, so let us talk about understanding price action strategies and market structure. How do you make money? Because we are not indicators traders. If you look at my chart right now, you're not seeing any indicator, you're not seeing anything apart from the horizontal lines that I am using. So we are going to be analyzing markets together. Let's analyze these markets together. Let's analyze this market together. Is there anybody who has a pair that we can analyze together? So that I will show you the reason why I'm going to place a trade for a particular trade. And I'm going to be telling you the reason why I will take that particular trade and all that. Is there anybody who is there that wants to analyze a particular market? Okay. Okay. If there is nobody there with a particular market, let's analyze. Because yes, okay, Precious, come up, please. What? Okay, CAD JPY. Okay, let's look at CAD JPY. That is Canadian dollar versus euro. Somebody say euro. I'm so happy that we have a lot of forex traders here. We have euro JPY, we have CAD JPY. Okay, we are going to be looking at this euro JPY and CAD JPY. So let's look at them. CAD JPY. CAD-JPY. Is the screen clear? Is it clear? All right, let me just remove all these indicators, all these things here now. Is the screen very clear? Is the screen very clear? If the screen is very clear, can you type 111? Okay, good, good. Now, this is CAD JPY, Canadian dollar versus Canadian dollar versus Japanese yen. Now, once you look at your chart, the mistake most people make in analyzing the market is that they go too low. They go too low, they will go to 30 minutes, they will go to 15 minutes and all that. You will not see the direction of the market with the lower time frame. Let me repeat myself. If you look at the lower time frame now, the lower time frame, like 15 minutes time frame, is telling you that the market is on a downtrend. If I use my trend line and do this, you can see that the market is on a downtrend on a lower time frame. All right, but as a price action trader, you don't want to go to the lower time frame. Lower time frame is where I call noise making. You will see a lot of noises. A lot of noises will occur on the lower time frame. The first thing you want to do when you're trading the forex pair, go to weekly. Just click on the weekly time frame. Don't go, because let me tell you guys, you and I, we are trading with people. When I call people, I'm talking about the banks, I'm talking about hedge funds, I'm talking about other financial institutions that trade this market. And these guys are not looking at 15 minutes time frame, or they're not looking at 20 minutes time frames or 1 hour time frame. They are looking at a higher time frame to make their trading decisions. So the first thing you want to do is to go back, put on your daily time frame, go to your weekly time frame, and analyze the market based on your higher time frame. So in this case, let's identify the turning points on this time frame. Will you agree with me that this place is a turning point? Because these are your trading, these are your decision-making areas. If the market is not on a turning point, you are not trading. How many of you will agree with me that this place is a turning point? Where we are right now is a turning point. Who will agree with me right now? If you agree with me that this place is a turning point, can you type yes? Yes, this is a turning point. This is a turning point. It's very clear. You don't need somebody to tell you before you know that this is a turning point. Just map up the turning points as a price action trader. Map out the turning points, okay? Excuse me just 1 minute, please. 1 minute, please. See, identifying the turning point has nothing to do with the currency pair. It doesn't matter the instrument you're trading. It applies to all instruments you have to trade in the market. If I take my cursor, if I click on the horizontal line and click here, make sure you are adding the week. Add the week to your, just lock it down. This is a turning point. So you want to ensure that you are trading based on this turning point. This is pure price action strategies. You apply it to, you check your candlestick patterns, you check trend lines, you can use Fibonacci retracement tools, but basically, as a price action trader, you are only interested in trading this market on a turning point. If price is here, I call these places no man's zone. Don't place a trade. Don't place a trade. Don't place a trade all year because they are not your confirmed turning point. And for you to know the key turning points, you need to use a higher time frame. Don't use 1 hour. You can go back to 1 hour, but start with a higher time frame. So let me go back. Let me identify this turning point with this 1 week. If I put this cursor here now, how many of you agree that this page is also a turning point? If you agree with me that here is a turning point, can you type 111? If you agree with me that this place is a turning point, can you type 111? All right, Gideon Bassett is a turning point. How do I know? If I use my PIP measurement, this is PIP measurement, right? If I put my PIP measurement here and drag it down, you can see the market went 900 pips. Then if I come back to this place again, this was May 4, 2019. Price got to this level and it came all the way down. All the way down. Okay, let me go back and measure it very well. Price got here and came down here, almost 900 pips. Look at what happened. Let's go back to the history. So what you want to do is to go back to history. Can you see that these are all turning points? Can you see? If you know these turning points very well, you will not make mistake in trade. If you add it to your proper risk management, I guarantee you, I believe most of you have watched the video about risk management. If you apply this principle, trading only on the turning points, you will not make mistake in trading. This applies to even indices. It does not apply to only forex. It applies to also indices. If you are trading only the turning points, I guarantee you, you are going to be making progress in your trading. So you go back to the left, you want to compare if what you have seen is indeed, you can see that all these places is, look at here, this was 1st April 2002, and it has been turning from this zone. So it is called turning points or major, you can call it support and resistance. You can also call it supply and demand zones. Once there is a massive movement, yeah, like this place now, those of you who are trading the euro, the CAD card, this place is a turning point. You have to be very careful now. What you have to do is to know, you should be taking advantage of sell opportunities here. I don't know if you guys are listening right now. Are you with me? When you are on a turning point like this, the first thing you do is to place a trade. There are two things you can do. You can place a trade after confirming candlestick patterns. Can't hear you, sir. Somebody said, can't hear you. Please, can somebody hear me? Please, can someone hear me? Can you hear me? If you can hear me, please, can you type yes? Okay, good. Now, if you look at this market now, this is on a daily time frame. What I was saying is that don't go to small time frames to analyze the market. Always use higher time frames to analyze your market. Always use higher time frames to analyze the market. Don't go back, don't go and be using 1 hour, 30 minutes to analyze. Look at this place, is a clear turning point. Just identify all these key turning points. Once you identify all these key turning points, trades become easy for you. If you look at this market now, price got to this place on 17 March 2021. It came down. It has come back to retest the zone, but it rejected it. It has not come down now. So if I am to trade, in fact, I'm going to place a trade on this pair. If I am to place a trade on this pair, it's going to be a sell. Why? Because of the past history. Look at what happened in the past. Let's go back. The past can be 5 years. The past can be 10 years. Look at what market did in the past. Price went up, but it pushed down. All right. Is history. Look at what happened. This was December 2016, December 2016. Price went down, it came down. Price went up, yeah. January 6, 2017, price came down. This was February 2017. This was February also 2017. And look at what happened here. This resistance became support. This is pure support and resistance trading. And remember, I told you that in trading, you don't have to learn everything in the market. In trading, you don't have to learn everything in the market. Let no one deceive you. Don't use indicators. This market has been an uptrend, but it has reached the turning point. This is a turning point. It is better you sell this. This is your sell signal. Look at your sell signal. I want to show you a sell signal. For those of you who are trading this pair, this is your sell signal. Imagine you had placed a sale after that yesterday. I think this one must be, yesterday was on Tuesday. This must be on Monday. candlestick. If you had placed that trade, because what it forms here is called double top. Market came here, 19 March, it came down and came back for a retest. If you see such a retest, and then if it shows you some kind of candlestick formation that indicates going down, just place yourself. You can do two things. You can do, when you are selling, look at this candlestick. This is your confirmation candlestick. You can do two things. You can do a sell stop, meaning that you place your trade like this, all right, at 87.629. That will be your entering price. Your stop loss will be here. This should be your stop loss. All right, this should be your stop loss. In case of any unforeseen circumstances, your stop loss should be there, and then your take profit should be here. Your first take profit should be here. Your first take profit should be here. You should not put it exactly where it turned from. Take it a little bit. Yeah. This is your confirmation candlestick. This is your confirmation candlestick. Imagine you have played this trade. Look at what you would have made from the market. By now, you would have made about 80 pips. If you enjoy the profit down here, you would have made like 100 and something, 125 pips. Are we clear on this? Are we clear on this, please? So the key is to identify this turning point with a higher time frame. So for those of you who are trading the CAD JPY, if you have not entered this trade, very clear, good. If you have not entered this trade, please, what is PIPSA? Oh, Preboy, you have not really watched those. You have not really watched those advanced, basic videos. You need to go back to lot and pips to understand what is a pip. All right. Okay. So you need to understand that a market was trading an uptrend, but it has reached a turning point. Remember, I started with the weekly time frame to know the direction of the market. If you look at it, look at where the turning point. That is why I made a trading decision here. I've watched some, but not all, sir. Thank you. So watch that video on lot and pip. You understand what pips are, okay? So this is where the price is going to turn. The market has been on an uptrend for a very long time. It may come down to this level before going up again. It may come down to this level. It may come down. It may do this. I'm not trading this pair, but once I look at the market, I know what this pair can do. It's simple as that. It may come down to this level. All right, it may come down to this level before going up again. If you add it to your fundamental analysis, your trade becomes so easy before going back again. But if in case the price break through this zone, how do you trade this breakout? A price break through this zone is let's say price break through here. Don't buy because price has broken through this zone. What do? You wait for the price to come back and do a retest. All right. If it comes back to do a retest, then you know that the price is going, then it shows you information like this. You know that it is going to be an up movement continuous. So for now, the reason why I'm going to be placing this sell is because there was a retest. Look at what price did. It came all the way up here. It came, touched this zone, came back here to retest. It is called the retest policy. Always allow, when you are on the support or resistance zone, allow the retest to take place. It is better you allow the retest to take place. Don't chase the trade. Like now you see a market touching a zone. You can place a trade and take quick few pips and run away, but don't chase it because it will always come back for a retest. Wait for the retest to take place before you can sell. That is more conservative. It is more secured, and you make more profit in that. Like now, this is also a confirmation. This is where the market starts. This is a confirmation candlestick. This also is a confirmation that the market will be going down. You can go back to even the 4 hours time frame. Once price touch that zone, you can go back to low time frames to place your trade. All these are this is a clear confirmation candlestick. It is called bearish engulfing. This one completely engulfed this. This also was a confirmation candlestick. This also was a confirmation candlestick. All you need to do is to place your trade here and then put your stop loss above. Take your first take profit here. If you want to hold the trade, you can hold it to this level, but most likely take your first take profit here. The price will come down here. I'm very sure that this market will come down. But before you do that, you want to first of all also know what is happening in the news. So you want to go to Forex Factory. Before you place any trade, every single day, go to Forex Factory. Now you have to filter this. If you click on this filter, you want to remove all these things. You want to remove all these ones. You want to remove all these ones. All right. Let's say you are not trading. Okay, I'm trading CAD. I'm not trading CHF. I'm not trading this. I'm not trading NZD. You just click apply filter. Because if you don't apply filter, and you also want to set your time zone, this is for currency pairs. For those of you who are trading currency pairs, this is very, very necessary. It is very, very necessary. And for you to become a professional trader, you need to learn how to trade the currency pairs as well. In as much as you are trading indices, always trade currency pairs. Always. I want to repeat myself, always trade the currency pair. If you click here, it's going to show you your time zone. This is West Africa, West Central Africa. If you click, okay, it's our time zone. It's our time zone, all right? Don't place a trade without coming to seeing this particular market, this particular calendar. Let's say you are to trade CAD yen. Before you trade CAD yen, come back to check if there is a news coming up for CAD yen. If you look at this, today was on Monday, was on the 5th. Today is, yesterday was Tuesday. Today is will I see name confirmation candlestick on lower time frame? Will I see same? Yes, you can see. I have watched some, but not okay. Will I see same confirmation candlestick on lower time? Yes. Look at it. If you go back to the 2 hours, it is good to use lower time frame to enter once you are on a zone like this. If you are on a critical zone, all right, it is good. If you use a lower time frame to reduce your stop loss, because going with a higher time frame like daily means that you have to wait. Meanwhile, someone who is going to enter with a lower time frame, once price is on a zone, you can even go back to 30 minutes to enter. That is the secret. As far as you have seen, the price is on a zone. All right. Look at when price touched this zone. If you have seen that price is on a zone, you can use a lower time frame to enter. But ensure that you have used your daily, whatever, daily, weekly, to identify turning points. Once you have identified turning points, you want to wait and enter with a smaller time frame. This is TradingView. This is TradingView. You can use TradingView to analyze the market. Just go to tradingview.com and the computer is hanging. Okay, so the market has been an uptrend. It has been an uptrend, but the uptrend seems to be coming to an end. It has been an uptrend, but it seems uptrend is coming to an end. So for this, I'll be more interested in the sell than the buy. The only time I will buy this market is when it does this, as I told you. The only time I will buy this market is when it does this. It will have to break through this zone, all right, come back for a retest and then give me a candlestick formation that I will not buy. For now, I will prefer to sell because I have seen with my weekly time frame that this has been a turning point. Have I made myself clear? Are you guys with me? This is very simple. You don't need indicators to tell you this. You can use your eyes and visually you will see if market is on a turning point or not. That is why for those of us, okay, let me show you this on even V75. For those of you who are trading V75, let me show you on V75. Now this is V75, all right? If you look at V75 now, look at what price did. Look at. I am on this trade now. I am on this trade now for a buy. Why? Because this place is a turning point. You can see the touch. This place is called, this is called fake out. This is a turning point. Look at what price did. The same thing. Look at this place. Price touched this place. All right. And it came down. It came back to test again. It came down. Whenever price touches this place, price usually goes down. So once you have discovered all these turning points, trade becomes very easy. The same thing, look at it. This is a turning point. This is a turning point. This is a turning point. So if I am to buy this market, I am going to take my profit here. This place. TradingView and MetaTrader 4, the same for market analysis. Yes, TradingView is a chart that you can use to analyze your market. MT4 also is the same thing. They are just different companies. All right, so if you look at it now, this buy that is going on right now, the best place to take your profit is here. The best place to take your profit is here because you are very close. You don't want to put your profit on this place. Take your profit here. You are supposed to buy from this angle. This place is a buying point. Your stop loss will be down here. Then your take profit will be here. A very, very few pips close to the zone. You don't want to put a take profit here. You can just take your profit here, close your laptop, play with your wife, play with your kids, do your job, do read your books, and do anything you want to do with your life. Just place a trade based on these turning points. It's a very simple and easy trading strategy. If you use it, become master in drawing these zones, you apply the principles, you know how to draw a trend line, you know how to apply the Fibonacci retracement tools, you know the right candlesticks. All of you, I believe most of you know what candlesticks to use. Like this was a confirmation candlestick. This is called a pin bar. You can use this candlestick. This was a candlestick to know that the price is actually going up. So after the formation of this candlestick, you just place a buy and look at what happened. To tell you that this place is a zone, previously, it got to this place and it came down. But look at what happened. Price broke through this zone. It came back for a retest. If you want to be conservative, this is your buying signal. Allow it to break the zone. It must always come back for a retest. Let this ring in your ear like a music. Allow a market to break through your support or resistance zone, but it will surely come back for a retest. Buy the retest or sell the retest. It is safer for you to sell the retest. Like now, let me show you Crash 1000. Now, Crash 1000 has broken through a zone. It has broken through a zone. One thing that will happen with this is a downtrend. It has broken through a zone and it has also come back to retest that zone. If you are using daily candlestick, allow a bearish engulfing to take place or a pin bar to happen here. Like today, there is no signal for today, but maybe tomorrow now, you may see a red like this kind of engulfing, this kind of pin bar to form here. If you've seen such kind of formation, place your trade and take your profits here. I don't know if you guys are following. Are you with me? If you are doing this, allow this retest to take place, all right? And then let it be that tomorrow, if it forms a bearish candlestick, a pin bar, a bearish engulfing, doji, whatever kind of candlestick, it doesn't really matter. If it shows you a convincing candlestick formation, that is when you want to place your sell. But for now, you are not sure of placing a sell. It has just broken through a zone and it has come to test that zone. This is a retest. You can see the rejection already taking place. If I go back to a smaller time frame, you can see the rejection is already taking place because this is a zone. Look at it is a zone. So if you are using daily, allow that daily time frame to finish. Look at, allow it to finish. Maybe tomorrow, if another one forms and it shows a bearish candlestick, you know that it is a sell. So at that junction, you want to take a profit here. That is how to trade a retest. So I hope you guys got what I have said so far tonight. This is very easy. You can apply this with any currency. Yes, exactly the same analysis I have marked up on my charts. That is good. That is good. See, don't try to learn everything in Forex. Master one skill, master one strategy. You don't see, as I study billionaires traders, as I studied millionaire traders and all these great traders, right? I discovered that they don't do so many things at the same time. They only concentrate on doing one or two things. They master those few strategies and they make money from doing those things over and over. So you want to become this billionaire trader by just doing one particular thing, but master it. If it is this strategy you want to use, just master this strategy and trade this strategy. You don't want to learn everything. If Forex is so big that you cannot learn everything. Forex is too big. You don't want to just master one strategy. The simple, easy price action strategy I am showing you is what billionaire traders use. I'm telling you based on what I have seen, I have read, I have been mentored on this strategy, and it works. All the people I have mentored on this strategy, they are all seeing results. How many of you are using this strategy already and you're making profit from this market? Can you just indicate yourself? You are using this strategy I have told you right now, I'm teaching you right now, and it's working for you already. Can you say something about that? It's working. It's like magic. It works like magic. Please, who among you already using this strategy? With this strategy, with proper risk management, your trade become easy. You don't want to trade like a gambler. You don't want to trade like a gambler. Just use this strategy with proper risk management, and you will see your trades in green, blue. Very correct. God save Atama. Good. Very, very correct. This is the strategy you use with proper risk management. Proper risk management is important. No matter how attractive the trade is, always use proper risk management. Once you apply proper risk management to this strategy, it works like magic. You don't need indicator, you don't need a signal from anybody. Just use higher time frames to analyze this market. Use higher time frames to analyze the market. And then you apply proper risk management with these principles I have taught you right now. Your trades become so easy. It's working very well. Added a few tweaks to match my personality, and it's boom. That's true. It works very well. You just have to now control your emotions, because trading is 80% emotions and mindset and 20% skill set. Once you master this strategy, you're not afraid of approaching the market. You master emotions. Once you see price doing that on those places, use proper risk management with the right mindset, not being scared of the market,